Hello traders and welcome to another video review. Today is Monday, April 3rd, 2023. Let's take a look what's going on the Forex calendar today. Very important data released overnight are Tankan Large Manufacturing Index and Tankan Large Non-Manufactureres Index. Those data are from the Japan and of course the Manufacturers Index unfortunately is below the expectations. The actual reading was 1 point, forecast was 3 and the previous reading was 7. That's data for the first quarter, and the actual reading of the non-manufacturers index is 20, in line with the expectations and just a little bit better than the previous reading. Retail sales data from Australia has been published as well. The retail sales beats the expectations of 0.1% with the actual reading of 0.2%, but they are way below the previous reading. Cqixin Manufacturing PMI, those data are from China, and the Chinese data unfortunately are released worse than expected, 50 points only, which means that the forecast of 51.7 was too much for the manufacturing PMI in China, and the previous reading was 51.6, so way below the expectations, way below the previous reading. What's ahead of us? German manufacturing PMI scheduled for release 5 to 10, manufacturing PMI data from the UK scheduled for release at 10:30, interest rate decision in Israel 3 p.m. and ISM Manufacturing PMI scheduled for release at 4 o'clock. Those data are from the US. So manufacturing PMI day, manufacturing PMI Monday, basically this data might have some impact on the market behavior. Nevertheless, the vast majority of the traders is actually looking for data from the inflationary data like CPI and the interest rate decision these days. So that's the situation for Monday for the Forex calendar. Let's take a look then on the US dollar to the Japanese yen first. What is going on there? The 4-hour chart of the US dollar to the Japanese yen is showing us a slight improvement here in the sentiment. We are now in the upper half of the RSI. The RSI is at the level of 60, so that's nice. For bulls, of course, we bounced from the level of 129.66, so that's the technical support for bulls, and we have of course the technical resistance. The resistance is located around the level of 135.27, and only a sustained breakout above this level might of course extend the movement towards the technical resistance located at 137.92, which is the swing high from the beginning of the March. Right now the market has been seen consolidating around the level of 133.60. that's the local high and the intraday technical resistance. The technical support might be seen around the level of 132.85. There's a very narrow zone here that's market been trading since the Monday close. So the situation on the US dollar to the Japanese yen is very clear. We are still trading higher. We are still trying to gain more ground. Let me just take a look here and change this moving average to apparently 50. So we are now trading above the 50 periods moving average, and we are now where's my 100 periods moving average? We are now trading well slightly above the 100 periods moving average as well. So we should go higher here, because those two moving averages might provide a dynamic support for the market. So US dollar to the Japanese yen moving to the upside. We got some data from Australia, so let's take a look at the Australian dollar. Well, the data from Australia didn't actually cause any difference here on the 4-hour chart. As we can see, the market is still trying to break above this level of the technical resistance, the 6,761, 6,000 786. This is the supply zone on a 4-hour chart, and as you can see, we've still been trading below this level. We can add one more level here, kind of important as well, 6,740. So that's the situation on the Australian dollar. As you can see, we are now, maybe we are not. Let me just take a look at the trend line. The trend line here, the local trend line, there you go. The local trend line might be right now under the pressure, because it looks like the bears might be attacking this trend line soon. So please pay attention to the trend line as well. Any breakout higher would lead us towards the level of let's say 6,628, and then eventually we got the technical support at 6,592. The main technical support is still the swing low at 6,567. So that's the main technical support for the Australian dollar. Doesn't look bullish at all. The momentum is negative, 42 points only. So the market is under the control of bears. They are pushing this prices lower and lower. So we should expect lower levels to come very, very very soon. And because there are some data from the US as well, let's take a look at the major pair, which is of course the euro dollar. And something is going on here. If we got some kind of a trend line, we can see straight on that just recently this trend line had been violated, right? We have very nice first touch, second touch, and then breakout below. So let's just take a look here from the closer distance. What is going on here? Definitely the technical resistance has not been hit and wasn't broken. Where's my horizontal line? There you go. So the technical resistance at 1.0930 is still the main technical resistance for bulls. We have the intraday technical resistance located at 1.0819. Okay, so we need to break above it in order to return to the uptrend. We are trading below 50 previous moving average. We are approaching 100 previous moving average, and maybe even the technical support located at 1.0714. Okay, so this is another interesting level on this market. Of course, there's the key technical resistance, technical support for the bulls, and basically the main level for now is the level of 1.0517. But for now, we are still way above this level. We just made a kind of a correction. The last one was 1.91. We just made it won't be much than this. Where's my price range? There you go. I'm trying to find the price range. Oh, there you go. We just made the 1.24. So that's still a little bit less than the last movement to the downside, so no overbalance yet. However, at minus 1.96 is bigger than minus 1.91. So this level here, the low from the 24th of the March, is the key technical support for in the short term. So 1.0714 is the level that basically bulls should be watching very, very carefully, because any breakout below this level most likely will result in the sell-off extension towards the swings low from the middle of the March. So that's the situation on the euro dollar. Very important level is right now under the review. Maybe the bears are approaching this very important level right now. So please stay vigilant and stay focused. Very important data releases today, plenty of them during the Asian and of course the London and the New York session, so please stay vigilant and stay focused during the first day of the first trading day of the April. So I hope you guys like it. I think we will see each other tomorrow. So for now, take care and bye bye.